And what we're doing with this series is probably worth mentioning, where we think the industry is actually headed in kind of the final and maybe the biggest way to distribute these deals is through a television series. And that's what we're launching. We're launching a series called Going Public, where we follow the stories of founders as they're raising capital, taking their companies public to NASDAQ. And for the first time ever, the viewers of the show can actually invest into the IPOs at the IPO price. And we thought, what better way to get a retail investor or a customer of a brand excited than to really, provide an in-depth profile and follow the journey of these companies, not just on a landing page or in a 2-minute sizzle video, but put them in a story, put them in a show where the viewers can follow the founders week after week. And as crazy as that sounds, I actually believe it will be the largest distribution ever brought to the industry when we launch this thing in April next year. We signed a distribution deal with Entrepreneur Media. They run the website entrepreneur.com. We're forecasting about 2 million unique viewers per episode. And at one point, I would have thought this was crazy. I would have diverted or reverted back to let's do a paid media campaign or let's get some PR for the company. But we think this is actually a very natural way to expose retail investors to a deal and to allow them to invest from their desktop, phone, or tablet device.
Are there any regulatory landmines with this idea?
You would think there are, but it turns out there's not, that there is a proper way to do this series. So, you look at Reg A+. Well, what is it? It's a securities exemption. It allows a company to raise $50 million. It allows the company to generally solicit or market their investment. And anyone over the age of 18 globally can legally invest. So we've been able to drive hundreds of millions of dollars into companies using this securities exemption through paid media campaigns, Facebook campaigns, Google campaigns, through PR campaigns, getting a company featured in the Wall Street Journal, the New York Times, getting an interview on Kramer's Mad Money, a podcast like yours, or owned media campaigns. The company can now market their investment to their million paid customers. So a TV series is actually a natural and obvious extension to what's already been happening in this industry for the past 5 years. Now, are there nuances and kind of some details, in the production? Yes, there are. So quick example, we have to make sure that anything that makes it to air. So, if you're one of the companies and we're producing the series and we put you in the show and it airs week after week in April next year, the statements you make have to match up with the statements that are filed in your Form 1A offering circular with the SEC. So there's a more rigorous production review and editing process that is going to be infused into this series than there is in probably most other shows. The statements have to match up. And then there's some other nuances. For instance, the reason we chose to have this series streamed online instead of featured on a broadcast television network is because once a company receives SEC qualification, technically they're only able to communicate the investment through electronic means with a clickable hyperlink. And I know that might sound crazy too, but it's in law. So that means you actually can't have a version of this show that's on, let's say, CNBC, where the company's on every week, or it's a standalone format and people go online to invest. There's format issues there. So because we've been in this space for a number of years, we're very familiar with the nuances of the securities rules, compliance rules, regulations. And so we've designed this series to be not only compliant, but actually what we think we're doing is we think we're fulfilling the promise of the Jobs Act, the promise of the Reg A+ exemption. This is what these laws were designed to do. They're designed to, provide easier access to capital for emerging businesses on one hand, and on the other hand, to level the playing field for everyday Americans, to give everyday Americans an opportunity to become owners in businesses whose products and services they use in their everyday lives. What better way to do that and democratize access to investments and put these deals in a show that's broadcast to millions of people or streamed online in this case, week after week for 10 weeks. So there's my long-winded answer, but The answer is yes, it's completely doable.
For more episodes, visit thedealflowshow.com and subscribe.